Hello guys, so today I'll be teaching you on sentiments. We look at sentiments. So we divided I think I'll write it down. We divided trading into technical, sentimental, and fundamental. So today we've been doing some technical, so I prefer today we do some sentimental. Right, so sentimental analysis is how will I say it? I can say it's how you can see the mood of the market, how traders are entering the market. It's not necessarily news or technical analysis like strategies. No, it purely looks on how other traders are respecting the market, the psychological mood, yeah, something like that. So I can say for a start, let me show you how you'll be looking at this. You can combine this with your technical analysis for a better sniper entry, a better understanding of the market. So some of the ways you can learn sentimental analysis is through, okay, let me say some things that I use to understand the market better. I use fear and greed index. I talked about this shallowly in a previous video. I use what else? It's basically saying how the traders respect the market, how they are doing, how the market is behaving, without necessarily looking at the technical part of it or the news. So when you enter the market, you already know, like, maybe the goal is supposed to be buying because a lot of people are doing this and that, or the Euro USD is supposed to be selling because of this and this. So I use fear and greed index for a start. It's a nice start. Then I want to introduce something that I did not introduce last time. I did not say something about VIX or DXY, but I did say you can do some research so that when you start this video you cannot be like empty at all. So what else? VIX, DXY, there is also something, Japanese index, JPY Index. I think, have I forgotten anything else? No. Oh yeah, okay, you can use, now after that you can use some sites like Myfxbook, maybe commitment of traders. What else can you use? FX Blue. Okay, but today I want us to focus on not the sites but the other stuff. What are they called? The indexes and how it affects the market basically. So for start, let me show you how it works. I did talk about how, example, currently it's June 2026, how the war is affecting the market, right? So for start, I want us to look at this. This is called the fear and the greed index. This is whereby it tells you how many companies are reacting to the situation of the market. So as you can see there is extreme fear, neutral, greed, and extreme greed. If you look here, it can tell you it's useful for the stock market, blah blah blah, S&P 500. This is like where they put their money. I tells you the strength. Okay, so how does this concern us? Because it's a lot of stuff. Well, for start, maybe I prefer you take down some notes. For start, it tells you we talked about safe havens, and we said there is USD, CHF, the Swiss franc, and the JPY. So a lot of people have been asking how the war affects. You see, when there is a war, some major pairs will shift. Like when there is a lot of tension in the market, some pairs will probably shift in their direction. They will either spike or fall extremely, like so much, because of this war. Let me use a good example. I said in that video before, I said USD is a pair, right? Is a safe haven. So that means that that's where a lot of money is stored in times of war and crisis. But I also said, like, the strength varies from, in the three, USD, CHF, and JPY. The JPY has the most, then the CHF, then the USD. So what I did not talk about last time, I did not say like trading between the three of them, how it affects, but I think I can talk about it now. Well, I can say that's where we left. I can say in the USD JPY, because a pair like this now, it's both of them are safe havens. What will happen in terms of tensions? So in terms of tensions, this usually goes down. Let me use an arrow for it. Yeah, so basically I think I'll write it down instead of explaining that much for someone who will not understand. Then something like, what else? USDCHF also goes down. I'll give you the good reasons why. They do go down. Also, people who are asking about gold acts as the opposite of this. I don't know if you can understand how I said last time, but I did say the pair that has the pair that is a safe haven will have a lot of volume being added to it, because take it as this example. People right now, billionaires, let me say like that, and the hedgers, when they see there is a war, they're afraid. Everybody wants their assets to be secured, so they convert their money and their assets into these three forms: USD, CHF, or JPY. If they have money like in their banks, they'll store it in the currency pair of USD, in a dollar, right? So, or in a yen. So usually this affects gold like in two ways. Usually gold will initially spike down like a small dip, then initially it goes up. I'll show you a good example on the charts. That's how it affects gold. Gold will have a spike, like how the news affects. Will have a spike, then it usually goes up after that small dip. Why does this happen? So let me start with the USD JPY. I'll put it right here for the note taking. So USD JPY, why does it fall? Because usually the yen is a both of them are safe havens, right? But the yen safe haven is more stronger than the dollar safe haven during massive panics. Usually the dollar is traded globally. The dollar is affected more. Still, as a safe haven, it's affected. You can't compare to the JPY with the yen, Japanese yen. So the yen, the Japanese yen, will have a greater strength than the dollar, although both of them are safe havens, so we'll have a greater strength. While the USD will still have a strength, but a far weaker one if you compare it to the JPY. So it will have a far weaker one than the JPY. So I think I'll put it like this. I think just to separate, because I don't think I've designed this note well. Yeah. So let me put them like that. So if you compare the JPY and the USD, it will have a lower strength to compare to it. That's why the JPY initially falls, and it falls actually generally. I remember there was a time that there was another it was something like a war, but it wasn't a war per se. I think was it election back in 2024. Something happened December, and I did not know all of this stuff. That time I did not know all of this stuff. So I was like analyzing my price action. Like, let me use a good example. Somewhere like in this order block, when I expect it to be like a good entry for a buy, then it's selling, then it's consolidating. I'm like, what's happening, bro? Yeah, because wars affect the market. This stuff happens, and sometimes it violates your price action, your strategies, and your stuff, and you get like wondering why you're losing your trades, and you're right because of war. And that's I'm here to tell you about them. Also, something else that falls: Australian dollar is not a safe haven. Australian dollar, but it falls usually. Just I want you to learn basically anything that JPY will fall at the end. You do remember something about base and quote currency, right? So like, let me write it. Base and quote. So right here, let me put it like this. AUD is a base, JPY is a quote. So if the quote is stronger than the base, it falls. I think I'll also write that down. If the quote currency is stronger than the base currency, it usually falls. I really have to manage my space well. Yeah, so if the JPY is stronger, it usually falls. And how do you know currency pair is stronger? Well, you can know from someone like, let me write a site. That's why you go back to these sites now. these sites I was talking about. So far we are discussing the fear and greed index. That's why you go to the sites. Where are they? Like the Myfxbook, FX Blue. For now I'll use FX Blue. Let me show you how it is. So if you go to the FX Blue right now, this is what you'll find. You see, it shows you the strength of the currency pairs. It's like the USD from BTC. Not only currency pairs, but also some crypto and some metals. Like we have silver, we have gold. So right here, what you'll realize is that you see, it says in the USD it's gaining. In the daily, it's bullish. Now the pair itself, not two things. The currency itself, the USD dollar, the US dollar is bullish. It's hawkish. So you can see it has a good strength. But if you take it with a pair like CHF in the 4 hour, you see it's falling. So what do we expect? We expect the USD CHF, if USD is buying, and we have it as the base currency, and the CHF is the quote currency, and we have it having a weaker currency pair. What do we expect? We expect, if we compare the USD and the CHF, we expect bullish, bearish, right? So if you compare the two currency, if you take and merge the two currency pairs, we expect a strong buy in the USD CHF in the 4 hour. Let me use it as an example. I think I'll use this. You go into the 4 hour, and yeah, you see that's your move there. It's been buying. Well, you can even put it from here. You see it's been buying in the 4 hour. Why? Because you see the USD 4 hour right here is gaining. The CHF 4 hour it's losing. So if you come back to the notes and write it as an example, USD CHF, we can see that the USD is gaining while the CHF is losing, which means in generally that the CHF has a weaker currency, has a weaker strength in the currency right now than the US dollar, which means the US dollar is buying the CHF. You do know how it works, right? The US dollar is buying the CHF. That's why you see this. Let's take a good example of something else. Let's take gold for as an example. In the daily time frame, in the USD, it's buying. Here it's selling. So do you expect if you go to the, let me write it down. I think you people will get it really well. Will get it really well. So yeah, so it's something like that, right? So here, what do you expect? We can see here it's falling, and you can see the USD is gaining, right? So what do you expect? The gold, the metal, it's not able to buy the dollar. The dollar is too high for the metal to buy that, it's dropping. So, and we see it's this chart actually, and we can see like right here in the it was in the daily time frame. We can see, you see it's falling, and it's falling really bad. Probably it's going for these sweeps right here. Yeah, it's falling. In the 4 hour, it's still falling, right? Because in our site you can see it's not only working in the USD, but it's also working in other currency pair. We can take, what can we take right now? We can take Australian dollar, the AUD, and the something that isn't contradicting other currency pairs. Okay, we can take GPB. It's not that bullish, but you can see it's something, it's some sort of bullish right here in the 4 hour and the daily, and the AUD in the 4 hour and the daily. So you can go into the 4 hour. If you compare GPB and AUD, we'll see. Let's write that down. If you compare, let's write that down right about here. British pound and AUD, Australian dollar, we can see that the British pound is actually bullish, right? And the Australian dollar is actually bearish, if I'm not mistaken. Yeah, in the 4 hour. So what do we expect to find? We do expect that the British pound has a much higher currency pair, higher strength than the Australian dollar, so it's buying it. You see, the Australian dollar is so weak, it's been bought by the British pound. So let's look at it for an example. I don't think I have it right here. I don't usually trade such, but let's see. Yeah, what do you expect? We said GPB is buying, it's supposed to be buying the Australian dollar. So yeah, so in your now analysis, so that you can take it down well, you come into the market with a more profound and more knowledge on what's happening. You see, without entering into the charts, like using just this, all this sentiment analysis, you can just go open the chart, and what do you expect? In your mind already, you just know that you should be buying this and selling this. So if you go to the British pound and the Australian dollar, what should you be looking at? Some technical analysis. You have the daily bias, so you can be looking at something like, I don't know, support and resist. You can like now use your strategy to look for retracement and enter. You have a better edge than someone who doesn't know. You see, you can, I don't know, you can use something like this to enter. Support becomes resistance. Well, we can actually take a look at this. Let's go first into the daily. You can wait for retracement somewhere around here. We have that slight order block. Yeah, we have the slight order block. We have this actually as a retracement. Let's see, where could someone have entered? We have that. Going to the 4 hour. Yeah, it was a resistance at first. It then became a support. Yeah, right. So then you go into the 1 hour. So I'm not like entering, I'm just showing you how you could have entered it. You could have tackled this, because this stuff, like if you look at it in the morning, you have a better edge to trade it. You can actually do it probably right even now. I don't know how you do your timing. You see, you can have that. You can look for something, a retracement somewhere, an order block, of which I'm starting to see it. Can have something like that. Wait for price somewhere there. I don't know. You get my point. You get my point. So that's it for the currency strength, right? So the Fiat Grid Index done. So and the the FX Blue done. So what I'll show you next is something called the VIX. The VIX works hand in hand with the Fiat and the Grid Index. What do I mean? As you can see right here in the Fiat Grid Index, it's showing you, or we said here, as it goes towards the fear, the USD CHF and the JPY, they rise, they gain their strength, because a lot of money is being converted into that pair, into that currency, I mean. So it's gaining a lot of volume. That's why the USD is supposed to be rising as the base currency in your pair. USD CHF, USD CAD, USD something is supposed to be rising, but while it's the quote currency, it's supposed to be selling, right? The quote currency is the second one in the pair. So the VIX works like this, but it's a chart. I'll go here and I'll type the VIX, and this is it. That's the VIX. So what does this tell you? It's not a normal chart. You don't usually come and trade here. So I'll put some lines to help guide us well. So in the VIX, it tells you about this, the volatility of the S&P 500. As I said, this is where like the huge companies store their assets. So in the VIX, you can put a line in the 30. Oh, we're in the 1 hour. Let's go to the daily. In the 30, you can put a line there. I'm not precise. That's not the 30, that's 29. Oh my god. In the 30, somewhere around there. And you can put another line in the 15. Yeah, probably 15. 15 is a nice place. Yeah, there. So they can guide you. And if you can see well, it usually acts as a support stroke resistance something. So what does this tell you? Above 30, should I take notes right here also? I think I should take notes for people who are writing this down. Where is my text? Oh my god, it's supposed to be here. What? Where is it? Where is it? I can't see it. Ah. Where's my text, man? Where's my text? Where's my text? Never mind. Let's take it right here. So usually above 30, I'm sorry for not arranging my work, but if you're writing this down, like, you have a proper format of writing. Above that in the VIX, and below that, well, below 15. So above 30, above that in the VIX indicates there's a lot of fear in the market. And when there's a lot of fear in the market, it shows you what? It shows you that it's gaining. It's actually extreme fear. It shows you that the safe havens are gaining. I'll put an arrow for that also. So above 30, right here, we do know that the safe havens are gaining, which are the USD, CHF, and JPY. They're gaining. Why do you ask? Why these specific currency pairs? Well, usually the US dollar, it's the world's reserve currency, right? In case of a global panic, everyone needs their dollar to become liquid, to pay off debts and settle accounts. So that's why it's just a currency. It's like the World Bank convert it into the dollar. Let me say like that for simple terms. So you ask, why the Swiss franc, the CHF? The CHF has a massive gold reserve, right? For political, neutralizing it, stuff like that. So usually it's also a safe haven because it's the largest gold reserve. Not the largest, but it has a massive gold reserves. The JPY, it's not the creditor of the world's all. Actually the entire world, it's the creditor of its foreign assets. So every foreign assets are usually in the Japanese yen format. So that's why they are these three. Your currency pair in your own country isn't involved right there. It's usually these three, because the first one, the USD, is the world's reserve currency. The CHF, the Swiss franc right now, it's the massive gold reserve, and the JPY, it's contains the foreign assets. So above 30 shows extreme fear. I think I should write it down. Above 30 extreme fear. So I think I can write here in the safe haven. What can I write? I think I can write gains. Now with that information, you do know if they gain anything starting with the USD, CHF, or JPY rises. But if they're in the at the end of the currency pair, it falls usually. Apart from this, if it's within itself, like the USD, JPY, it will initially fall because the JPY is stronger than the US dollar at that time, at that global panic. What else? The USD, CHF will also fall, but with other currency pair, I think that's about right. So going back to the notes, what else do you need to learn? The DXY. The DXY, it shows you how this is the easiest actually. It's something like this, you see. Initially, I never finished here, but you see around here, March date 9, there's extreme fear. Like literally so much. It's the daily time frame. So around March date 9, we expect the Euro USD to be falling, GBP USD to be falling, USD GPI to be falling, gold to be falling, and all. Like, it gives you an advantage over the rest of the traders. So we can put DXY in there. This is my favorite actually. I come here and analyze this like a normal currency pair. It gives you a very better edge. So the DXY, this is how it operates. If it rises, here's my text. Imagine I could not see it all that time. So if the DXY rises, US dollar rises. If it falls, US dollar falls. It's basically that. Nothing much. We can take this as an example. Where is the ellipse? Let me use the ellipse. You can take this as an example. You remember this time from when? January to March. It means, like, the DXY means the dollar. It's the US dollar index. So let's see if anything with the USD at the start will be rising, apart from the exceptions. And anything with the USD at the end will be falling from that time, January to March. So where is it? So January to March, we do see January to March that time. Let's take our ellipse. Yeah, you can see it fell from the start of that to this. I think using a rectangle will be much easier, but you can see it was falling also. Let's go to GPB JPY. No, GPB USD. I'm sorry. Not yet. Okay, so you can see from January to March, still the same thing. Jan all the way down to March. Let me still use it here. You can see it was falling. Now let's use something else. Why was it falling? Because the USD is the quote currency. Let's use something that starts with the USD card. In the USD card, what do we see? From January to March. From January here to March. Well, this was consolidating, but you see initially it was like rising, right? No, but let me use a good example. US dollar what? I can't use the CHF because I said it's the exception. And here we go back again. So that's how we use the DXY. We have talked about the fear and the greed index, the VIX, which stands for like the fear and the greed index, but in the chart form. DXY, the US dollar index, the JPY. Oh, we have not talked about the Japanese index. So it's the same as DXY, but acts for Japanese currency pair. So yeah, so it's basically the same stuff. You can see it's falling. So people who trade USD JPY or DJ or AUJ or UJ EJ, why should you trade that? But let's see, it's been falling. It has been falling, right? So you go to something like a suggestion. Let me use this. You see, it has been rising. It's the complete opposite. Why has it been rising? Let me go back to the notes in case for further. So the JPY has been rising. The what are you talking about? The Japanese yen has been falling. So if you go and check something that has it as the quote currency pair, shows you that it should be rising. Why? Because the JPY is rising. The JPY is falling, so it as the currency pair, it cannot be bought by the GPB, so it's rising. It's basically that's it. Yeah, nothing much about this. So in our notes, we can go to something about Myfxbook. So here, it's a sentimental site. Okay, it's a site basically like the usual, but it shows you like the market sentiment. I did talk about this, I remember last time, so you not revisit them. I won't like talk about it anymore, but you can see if a lot of traders are selling something, you are advised. It's not a must, but you are advised to buy. If a lot of traders are buying, like here, okay, those currency pair are not major. And the USD, you're advised to sell because majority of the traders are wrong. It shows you the retail traders, us now, not the hedgers or the commercial institutions, no. So we did talk about that. I won't repeat it. Commitment of traders, and we have talked about Myfxbook. So we have remained with number 6, the commitment of traders. This is a report issued. They are supposed to issue to the government for checking up. It's like a mandatory mandatory stuff, so it's a must they do it. So here you do know where they are. I'll do it's a bit long, so I'll do a separate video on it. They do show you where the banks. Let me divide them. So like they are the commercial, the non-commercial, and they are the commercial traders. Now they're the banks and us now. There are like three kinds of traders. There are us, the retail traders, the commercial and the non-commercial. So between the two of them, they are the institutional ones, the ones that now like banks and stuff like that. And then now they're the hedgers, like Wall Street and other stuff. So here they are so different. In the commercial, they know more about currency pairs like Euro USD or USD. Now, and in the hedges, they know more about indices and about metals, crypto and stuff. So their views, how they view the market, is a way better way than us. So, for example, if an institution is saying it's thinking like the USD will be gaining in this coming month, and they are entering longs on Euro USD, you as a person, as a retail trader, like, who are you? You're not an expert more than them, so you're advised to trade with them. Yeah, so I'll talk about this in a separate video. I think that's enough. That was enough for today. Yeah, see you in the next video. Thanks.